a concise approach to top-down market strategies and the forces affecting investments. That's the Spoken Word on Investing.
Welcome to the Spoken Word on Investing, the podcast. A little different format from what you may be used to if you've been watching these segments on video, but same expert insights with our Chief Equity Strategist, John Blank, who joins me now from the West Coast, Los Angeles, California. John, hopefully you're safe from the fires out there.
I am, Terry. It is hot, though, I have to tell you.
Yeah, I've been hearing you guys have triple digits on some days.
Yeah, it is. It's extraordinarily hot downtown. Unfortunately, I don't live downtown, and I get the extra benefit from the ocean.
Well, we're going to get the spoken word from you on the stock market like we normally do while you're staying cool. All the years I've been doing this, John, all the years I've been watching the market, I come up with the bottom line: the market is weird. Every time one person sells, another one buys, they both think they're smart.
Yeah, there's some truth to that, Terry. Obviously, today, we're looking at a market that's bouncing, and the S&P 500 trading at 2,440 on its momentum, mainly because there's no earnings reporting going on. There's very little macro news.
Right.
And there really isn't anything to be trading this positively on other than a bounce.
So tell me, are you still bullish this market?
I'm not bullish at all this summer. I think we're going to continue to do this range trading, day-to-day stuff, and I don't think you should expect more than a 500 at the end of the year, which is only 60 points from here, which is only 3%, which means we've got to do a lot of bouncing around to get over that place.
Does that mean you're bearish, or you're just kind of on the fence?
I'm in what's called the late stage cycle theory, which is that typically in the middle of the stages you can expect a 15% annual return, which is what we saw last year. But when you go to the late stage, you get a 5% return. That's basically what I think.
So we've heard just about everything that can go wrong with this market. Do you see the rally fading anytime soon?
No, I don't. I don't because while the U.S. is in a late stage of its business cycle, there's many countries outside the United States that matter a lot to us: China, Japan, India, Europe, Brazil, all of which are in middle stages, in Brazil's case, in an early stage. So we're drawing some of our strength from an earnings perspective, large cap earnings perspective, multinational company perspective from outside the United States.
You wrote recently, John, that the nation of India has caught your eye. Why?
Yeah, let's talk about India, Terry. It's a good example of a country that's getting a ton of press, positive press, because it's got this story that everybody likes, which is a 7% annual growth rate. And it recently elected a new prime minister, Narendra Modi, M-O-D-I. Mr. Modi is turning out to be kind of a tough guy, kind of a ruffian. And I wanted to turn everybody's attention away from, the incredible oxygen that's been sucked out of the room by our new president in the United States to this individual. On the 8th of November, 2016, just days after we did an election here, Mr. Modi went out and did what was called a demonetization. That's a big word, demonetization. So he basically demonetized. He took money, actual physical money, 500 rupee notes and 1,000 rupee notes, which are effectively $10 and $20 notes. Mm-hmm. In the United States terms. So think of one day waking up. And he did this, by the way, at midnight on TV. He just got on TV at midnight, not on the day, not on the business day. And said, hey, all $10 and $20 bills effectively in the Indian context, the 500 and 1,000 rupee notes are gone. You have to replace them tomorrow. This is our big plan to rid ourselves of drug trafficking and money laundering.
So I'm guessing you didn't think that was a smart move.
No, it led to massive riots at all the banks, and everybody had to go change their old bills for the new bills. People died. Several people died in these riots that took place. The government's opposition roared into action all over the country. And it basically became a source of incredible friction for the economy. And the downgrade from the growth rate went from 7 to 6.5, 6.4% to be exact at this point. So they lost 10% of their growth rate by pulling this stunt. And again, in the midst of all this euphoria about India, we have this individual who is running around doing midnight telecasts and taking the $10 and $20 bills out of the country.
So how does that stack up now against world markets at all?
Well, it's a good news, bad news thing. One of the things that's interesting about it, Terry, was it's actually caused an electronification of financial markets in India. Because everybody was like, well, if you're going to pull this stunt on us, then I'm going to move to electronic wallets and electronic payments. So this company, Paytm, went up 435% in its traffic overnight. So one of the things that's interesting for India is, you think about all the Square kind of businesses in the United States, the kind of immediate pay businesses. This is now going to take off in India. That's an unintended consequence about it. The downside is a lot of these growth rates are being pushed way too high for India. And there's going to be a lot of people who need to downgrade their views on other countries' leadership outside the United States.
So what he did was not real smart, is what you're saying.
Yeah, I think it was pretty dumb. I mean, I'll just be right on the record and say it was plainly dumb.
Kind of brings to mind, John, that quote from that famous self-help author, Napoleon Hill, who wrote Think and Grow Rich, when he said, money with no brains is always dangerous.
Yeah, I think so. I mean, that's it. Money with no brains is always dangerous. And here we got, a prime minister acting like he's smart, right?
I'm not going to touch that one. Let's switch over to sectors like we always do when we talk with you every month. The two biggest sector pickups in this early summer stage, you say, consumer discretionary and industrials, correct? Chemicals we'll throw in there as well.
Yeah, absolutely. Obviously, I want to talk a little bit about, this cycle idea. And a lot of people are pushing the idea of a late cycle, which is typically in a late cycle you have inflation, and energy and materials are the stocks to play. Well, what I just told you about the latest Zacks ranks is consumer industrials and the consumer discretionary and industrials are the big names to play. That's a middle cycle play. So I think one of the things that's happening in strategic thinking in the United States context is we're getting the cart in front of the horse. We're still in a middle stage, a very late middle stage, but there still is plenty of evidence in consumer discretionary and in industrials, which are classic middle stage sectors, that's where the action is. And that's what I want to tell people is everybody's trying to jump in front of everybody else because the Fed's raising rates, and they think that means it's a late stage. But the Fed is raising rates from 0, and it can get all the way to 2%, and it's still way below where other late stages began. So we're not in a late stage. We have at least a year to go before that happens, and we're going to see inflation before we see that, or we can really call that one to happen.
All right, give me some names in these different industry categories. Marine Products Corp, is that one?
Marine Products, Gary, is the third largest distributor of stern-drive powerboats in the United States. So if you own a premium branded boat, they go under Robolo and Chaparral brands. And also fishing boats, offshore fishing boats. These guys are the guys. So go down to Florida. You can know these guys. This is the company you want to play with.
All right, Stanley Black & Decker. I've got some of their tools.
Right, Stanley Black & Decker. But again, we're talking about not only do-it-yourself, but we're also talking about construction, industrial, and security businesses that this company runs. So this is, again, a classic CapEx story. The economy is tight, 4% unemployment. Let's get some building done internally with remodeling, in commercial, all across the board, Stanley Black & Decker.
Monsanto then rounds out the list.
Right. Now, Monsanto is an interesting one, Terry. I'm throwing this one in, and this is actually a materials company, in effect, because one of the things that gets thrown into materials companies is the pesticides and herbicides that are made by a company like this, along with seeds and other genetic-type innovation. So Monsanto is effectively telling us, by seeing that as a strong Zacks number 2 buy story right now, that there is elements of the late stage in play. Commodities are rallying, particularly agricultural commodities, and one of the benefactors and participators in that is the Monsanto. So again, going through Stanley Black & Decker and Marine Products, I'm in the middle stage, but I'm finishing up with Monsanto, so I'm 2/3 in the middle stage and 1/3 in the late stage with this U.S. cycle.
All right, John Blank, Chief Equity Strategist here at Zacks, demonstrating the true definition of the spoken word. With John, I'm Terry Ruffalo.